Hello and welcome to this video tutorial on how to use the BFS International Tax Management module. I'm going to show you how to configure your instance of BFS with regards to tax countries and country relationships. First off, you need to make sure that your instance of BFS is set up with your correct tax country. Navigate to the house account and then make sure that tax country has the right setting. In this instance, the licensee is based in Sweden and thus this country is selected and saved. For this demonstration, we are going to set up the licensee as a qualified intermediary, which means that the licensee will handle any tax withholding on behalf of the selected country. Click on Create Qualified Intermediary and navigate to the country you wish to select. In this instance, I will add the USA. Next, I will configure tax rates. In order to use the tax management module, the licensee has to configure the tax rate for its country. This is done by navigating to System Data, Tax Management, and the Country Tax Rate tab. Click Add Country Tax Rate and locate the correct country, in this case Sweden. Next, you should select the transaction type, which you would like to configure the tax rate for, and in this instance I will use dividend. For Sweden, the tax rate is 30%. As the next step, we have to configure the cross-border tax rates. Click on the Cross-Border Tax Rate tab and then on the Add Cross-Border Tax Rate button. This will show you a dialog asking for source and destination country. Imagine that you have a customer which is based in Sweden and receives dividends from a US-based company like Apple. The source of the funds is the US and the destination is the investor in Sweden. According to the double taxation treaty between Sweden and the US, a tax rate of 15% should be withheld on behalf of the US and the remaining 15% should be withheld on behalf of Sweden, as long as the client has signed a taxation form, which I will demonstrate later on. For this demonstration, I will select the US as the source country and Sweden as the destination country. For the transaction type, I will select dividend, and according to the double taxation treaty, the tax should be 15%. The last setting which has to be correct is the tax country of the tradable instruments. This setting determines which source country is to be used when, in this example, dividends are paid. This concludes the International Tax Configuration video. Thank you for taking the time to watch.